Well, let's move on to the commodity space. And Manisha Gupta joins us with all the updates. Hi, Manisha. Good morning.
Morning. Hi. The global cues really seem to be coming in from the currency space today, where you have the US dollar index near a 3-month high. The global growth concerns are weighing on the other currencies, and the dollar index seems to be the safe haven right now. If you look at the sterling, that's extending decline to a 3-week close on Brexit uncertainty. Euro also is holding near those June 2017 lows on dovish ECB statement that we saw come in the previous week. And that really seems to be defining on the movement in the other asset classes. The crude oil prices, in the meanwhile, have edged higher on OPEC output cuts. There have been statements from Saudi Arabia oil minister saying that the output cuts will continue until June. Earlier the OPEC and alliance is meeting in Vienna on April 17 and 18, and that is when they had said that they would review the situation or the output cuts. But now it's going to be the June 25-26 meeting when the OPEC and allies will take a sense on whether or not or how much cuts would they really need to continue. Apart from that, the U.S. drilling activity also has declined for a third week, and that has been bullish for the crude oil prices also. But what the markets also will take cue from is the China credit and new bank lending data for Feb, which has undershot market estimates. So the slowdown in China, Asia, Europe, etc., continues to weigh on.
Absolutely. The global growth slowdown continues to weigh on in the commodities markets. Let's see whether the impact of that on the equities markets will come back or not. But talking about the equity space, we have the derivative space to contend with. And over the last 5 trading sessions, what has really stood out is the FII purchase in cash markets. In just the last 3 trading sessions, the FIIs have bought close to around 3,300 crores or $500 million in the cash markets. The domestic institutional investors, though, viewing this as an opportunity to take some money off the table. Around 2/3 of the FII buying has been accounted for by the DII selling. In index futures, though, Friday's trading session was a snapping of a 4-day rally that we saw on the Nifty. The FIIs sold in the cash markets, but remember, the FIIs are net positive in the index futures. The long exposure stands at 52%. What was interesting was the data coming in from the options space. For the options expiring on March 14th, which is this Thursday, the maximum open interest action has been at the 11,000 put and the 11,200 call. If you take a combined premium of both these strikes, it would come to around 50 odd rupees. So that's telling you that the smart money believes that the range of 10,950 to an upper range of 11,250 is something that will remain at least for this week. On Friday's trading session, the FI has bought close to around 1,000 crores in index options, and they added 2 long calls per long put. Clearly, nearly around 22,000 long calls were added as against 10,000 long puts. 11,100 call. That one added 4 lakh shares in open interest. Remember, the February high of the Nifty has been 11,118. So it'll be very interesting to see whether we see that another gash at that level for our market or not. The important point, however, is that the downside is protected. The index puts, FIIs have close to 1.75 lakh short index put positions open for 65,000 short calls. That's telling you that the FIIs are writing more puts, believe the downside is supported. On Friday too, they wrote 3 calls per put.
All right, Mangnam, thanks a lot for that. But with that, it's curtains down on Power Breakfast. Bazaar Morning Call comes up next. Stay tuned.